I went from 500 something dumb credit score, barely any savings in the bank, to becoming a homeowner and then an entirely different financial trajectory path.
He's talking about the rates and the Iran war. And I said, look at it like this. This is creating a buyer's market for you. When the rates were down in 2 and 3%, it was a feeding frenzy. People were throwing money at sellers and driving the prices up.
You got to look at that from the micro level, your personal level. If you make that decision to buy, you're moving here, you know you're coming here, especially if you're military, and you plan on probably doing 3 or 2 tours, then you probably want to look at what's the runway, how much time do I have to make sure the credit score is good.
You can lie to your financial planner. You can't lie to your loan officer. The loan officer will find out.
Welcome to In Search of Excellence Island Style, powered by the Broker Mortgage Experts. This podcast highlights leaders raising the standard through consistent, values-driven leadership, lived with aloha.
We have actually had, I would say, 2 different years already in the market, and I think we're heading into a third, which is crazy. So let's start with you, Dan. What do you think so far? How would you rate the market midpoint of the year? What was your kind of a big surprise, maybe a disappointed appointment, or a positive, something that was really positive that was unexpected?
Yeah, let's see. I think statistics are always important, and we're always monitoring the statistics that come out of HBR, the statistics that come out of national levels. But I think what's been a surprise to me is truly the 2 different markets that we have here on the island, and that being the single family market, and which is so different from the condominium market here on the island. And then you actually take that a step even further and you get into an even more micro geographically specific market within both of those. So I think it's very interesting that, like I said, statistics are very important and they're great. However, you really got to dial it into the micro. So when these stats are coming out and you're putting the Ritz-Carlton or Trump Tower in the same category as Mehana or Spinnaker, I think that's very skewed and poor planning. And then the same goes for your single family, where you got Kahala statistics merged with, say, here in Mehana, where your single families, I think we've seen some on the market that just came down under 900,000. And so, yeah, I think it's been a very interesting ride. I think it's been a very interesting ride where the buyer, the consumer, just has to be very well informed so that they're making the most educated decision along the way. It's been a little disappointing. I think we're all hoping to see a little bit more rate relief by now. I think we've kind of stabilized and, at least for the time being, have not headed in the opposite direction of increased rates. I know that still may be on the table depending on how inflation reports come out, but I would hope to see some relief. But with that being said, as we know, there's a lot of incentives that come out from some of our lending partners that make things more tangible, more feasible, more affordable for our clients. So that's been a nice change of pace.
Yeah, I think some of our lenders they've seen that we're still in a housing recession. We've been in a housing recession since basically the end of 2022. And yeah, so every once in a while they'll come out with an incentive where the lender's paying, basically buying down your rate for a year, right, which for some of our buyers, that's saving them $8,000, $9,000.
Exactly.
And that's great to get a rate in the low 5s. We've seen an emergence over the last 12 months in 5/1 ARMs or 3/1 ARMs, which is adjustable rate mortgage, but it's fixed for the first 5 years, which is great because most people don't even own a home for 5 years. They sell between 4 and 6. So, I mean, we've had some buyers in the low 4s on 5/1 ARMs. So, yeah, some of the lenders are really trying to incentivize and just keep the market moving. And certainly being a broker, we're able to kind of pick and choose from those lenders.
More options.
Yeah. And Mike, what do you think about the numbers aspect, what Dan was talking about?
Well, I mean, everything driven from the national level when you're talking about the interest rates and what's happening in the economy. The actual sales and the way things happen here, a little bit different. It is a specific market because you make that decision coming here, whether you're gonna rent or buy. And for a lot of veterans, it's a look at what is the appreciation and can I afford something there, and then can I hold on to it and wind up selling it down the road even after I leave, which our exit strategy discussion that we have during the Successful Homebuyers seminar really helps people better understand what they're thinking about. But yeah, the prices of houses fluctuate fluctuated a little bit, probably gone up just a tad, but the interest rate is still, they have leveled off. I think they're going to come down a little bit more, but it's still at that point where people feel like, oh, it's too high, because we lived in that other environment of 2 and 3% for so long. So it does make it a challenge, but I think that we're in a good way and the path is good ahead.
The fact that we have had the median sales price of single family homes just hit an all-time high at 1.24 million. That says that, there's still demand. There's still strong, even at the higher rates. If the house is on the market, if a house is on, single family home is on the market, it's going to go if it's priced right. And then you talked about the micro geography, the windward side, they're going above asking price. Sellers aren't giving credits over on the windward side of Oahu. And buyers need to understand that. And when buyers, especially veteran buyers, are moving to Oahu, everybody wants to live in Kailua or Kaneohe. And I know I did. I ended up buying in Ewa Beach. They don't even think Ewa Beach is an afterthought. They hear all the bad things about Ewa Beach. The biggest bad thing is traffic. And traffic, it's relative. Traffic, all across country I've lived. West Coast, East Coast, man, traffic sucks over there, and you got no view. At least you got a view here, and it's the nice thing about traffic is it gives you a chance to talk to your family or to listen to a podcast to educate yourself.
Yeah.
So,
And I want to touch on that because I think we all live the life. Everybody who served on this island, we lived that life going down to Pearl Harbor. I came over to Hawaii 12 years ago from 29 Palms with a 500 something credit score because I thought the Navy was paying my student debt. And it was just, my mail was getting sent to the Marine Corps barracks, and we know where that goes. Trash or something. I don't know. Ask S1. But what H1 afforded me the opportunity, I always joke around, it was H1 University. It was truly,
I like that.
It was H1U for me. And I kid you not, back when YouTube was a lot easier to actually, the unpaid one was easier to listen on your phone. And then I discovered Pandora and then Spotify, all these financial podcasts, all these audiobooks, Audible. H1U became literally my...
I love that.
I had a bachelor's, and this became my bachelor's stuck in traffic on H1.
Yeah.
And I went from 500 something dumb credit score, barely any savings in the bank, to becoming a homeowner, and then an entirely different financial trajectory path. So yeah, please do not just hate traffic. Like you said, family's great. My family's in Chicagoland, so it's always nice to catch up with them. But if that time difference is too rough, get on the podcast. Hit us up. I can give you some great Audible suggestions, some great podcast suggestions. Check out this podcast and join H1 University. Tuition is zero.
I'm going to make an argument against the traffic and living in Ewa because we live in Pearl City. And so we actually made a decision not to live out there because of the traffic. And so that forced us to go look at locations that were closer to where Jonah was working, because that was the big deciding factor, was his commute. So we live in Pearl City, and we really love it. We love our neighbors, and it's not, obviously, Ewa and is a lot newer, and it's beautiful. I'm not saying Pearl City isn't. Pearl City is, we'd say, a little more seasoned. But we love our neighbors, the community, the vibe out there. We do the Pearl City night market on Saturdays, and it is so accessible to the rest of the island. Yeah. I never feel like, I can't go to down east because, it's just too far and I get past that bottleneck. So that's my argument against
options.
That is great. I mean, like I was down in town yesterday at Honolulu Country Club for an event, and I don't want to drive back down to Ewa. I really don't, and I didn't. And I got an event this evening in town at Merriman's, and I'm like, I think I'm going to take an Uber home because I'm not going to drive drunk. So, because I know there'll be some wine at dinner, so I'm probably going to Uber home, and that's a $60 at least Uber ride. Is it more? Oh man! All right, I've already conditioned myself to $100, but that is one of the drawbacks of living in Ewa Beach, and Pearl City is beautiful. Well, what are some of the downfalls or downsides of Pearl City, IAF? You live there. I just drive through there.
I would just say aesthetically, it doesn't have that look that Ewa has. If you want that aesthetic and that city planning, which, because it's newer, Ewa has, you're not going to have that. It's like any place you live. You just adjust to it. and you start to find those things that you thought were going to bother you start to not really bother you anymore. But yeah, I don't want to downplay Pearl City or IAEA because that's where I live. And
Oh, it's
those are my
great.
neighbors.
No, but you have less inventory
Yeah.
because people who own homes there, they've owned those homes for a long time. A lot of them are single wall construction.
Yeah. Oh my goodness.
That's and that's like that on a lot of the island where you have the single wall construction. Well, you're very close to your neighbors pretty much everywhere on the island. But they're older homes.
Very true. There's also opportunity to build and add. We're looking at doing that on our property. We're looking to add an addition possibly and take advantage of that renovation HELOC actually. And I think we have the space and the ability to do that in Pearl City. I'm not so sure if you have that kind of.
Yeah, no, you're absolutely right.
Yeah.
You had mentioned the what is it, the PUDs, right? The Planned Urban Developments. And Ewa Beach, Kapolei, they were really built with that vision in mind, as compared to, I don't want to say the beginning of Oahu civilization was Pearl City IA or anything, but it seems to be very central, hence the age of the homes. But with that and without that greater vision, the flip side, the positive to that is that you have land.
Yes.
Larry doesn't have land. No, I'm kidding. But compared to, and your lot may be
Right,
you
I
can be
do.
larger.
And you have more freedom
Yeah.
Yes.
to do an addition
Yeah.
than I do.
Definitely.
I don't think you need to get permission from an HOA or
Right.
We're at the starting phases of planning, so we haven't really dug that deep into that part of the planning piece of it.
Yeah.
But yeah, we're in the starting phase.
It's probably DPP, and so long as if there's no HOA that you're paying, it's probably DPP is your only governing authority.
Yeah.
Okay.
As compared to us here in Ewa Kapolei, we probably have 4 levels of approval.
Back to Eva traffic, because I'm going to cycle back also and mention vets. But the Eva traffic that everybody mentioned, H1, everybody experiences that traffic. The traffic here when you're in Eva, where Larry lives, where I live, is you got about 4 miles on Fort Weaver to get to H1. And the difference really in traffic and then during non-traffic hours, the difference is probably somewhere between 7 and 12 minutes, maybe 15. It's not that great. It's not that bad to deal with it when you're dealing with it for 4 miles. When you're on the East Coast and you're at Quantico and you got to go to D.C., you're talking 40 plus miles that you're in that bumper to bumper. So the distances that we're traveling in traffic are really a lot less than probably anywhere in the country. Now, to vets and the homes in Eva is if you're a vet looking and you're moving to Oahu and you're going to be probably not at Kaneohe. If you're at Kaneohe, you could still live over this side, and people do, but it's a little bit of a trip. But the homes here are going to allow you to move and bring your stuff from the mainland here and almost let you plug in as if you were still on the mainland. The houses are still a little bit smaller, but they're much newer than Wahiwa or Pearl City or IAEA. So you're getting what you're used to. And to be honest, anybody coming from the mainland probably wants air conditioning.
No jealousy windows?
And that's in some of those areas we talked about, they're not available. Right. It's not available,
Yeah,
readily
you're gonna
available.
Split ACs in the homes, yeah.
That's my thoughts there with respect to the traffic in Eva, and then also veterans being able to move in pretty easy.
It just always it comes down to give and take, pros and cons, and then just having that honest discussion with an honest professional here amongst us. Of, hey, these are the facts.
Where do you live?
What do you value most? And then we dial it in.
And it's hot in Eva.
Yeah.
I love it.
Yeah.
I like that. Sometimes it's a little humid when there's no trade winds, but I don't mind the heat.
I'm going to quote a real estate agent when we were coming to the island. And this agent said, Eva is where dreams go to die.
Oh man, what?
Who said that?
I'm not telling you.
Yeah, I know who said that. I'm sure I do.
But
She's a hater. Stay up on the North Shore. You know what we're talking about.
but it was advice that was fitting for us, and she steered us in the right direction because we're very happy where we live.
That's
So,
funny. She's totally wrong.
I think it's funny that you know who said that.
Oh, I know who said that.
I second that, Larry. She's wrong.
I love it there. It is safe. It's very family friendly down on Eva Beach. This is quickly becoming the Eva Beach podcast, but it is great living down there. I think it's. Man, I go for walks. I'm right next to the beach. I live on right next to. 8 golf courses within a 5-mile radius of.
Yeah, you could carry your bag to all the golf courses.
I could.
So
I could.
prior to Eva being developed in the way it was, what was it like? Or did they find a pocket that they could develop that was previously undeveloped?
Well, it used to be sugarcane fields, right?
Okay.
Yeah.
I was just kind of wondering
They had-
where.
it was like Fort Weaver was a 1-lane road, one way each way for the longest time. I don't know when they they expanded the road and started building, but they pretty much built as much as they can coming down. They're actually, I guess, that middle area between West Lock and Eva Gentry area. They're still building some homes, but which makes traffic a little tougher, but they're running out of land in Eva Beach.
Well, that's the reason I'm asking is I'm like, where's the next pocket to develop? Because what I see in Eva Beach is what I saw in California, where Santa Clarita and Valencia became the new. When it first, my sister bought out there before people started flocking there, because people were trying to find places to live outside of LA, but still be able to commute in, and it became this thriving community that was highly desired, like what Eva is. But now they're starting to become a little too congested, and so I'm wondering where's the next pocket on the island?
Well, they're building there now. It's where Dan lives.
Yeah. I mean, Hope's probably got another 10 years ahead of them. Gentry's over here in Kapolei. They're still going to be pushing by the new VA. And then where else? Coal Ridge has probably still got another decade ahead.
Yeah.
Okay.
Homes are still coming. That's crazy.
great.
We're
That's
on a
great.
rock, but and this rock ain't getting bigger, but the homes are
Yeah.
coming.
When you take the rail, and I don't know if you guys, I take the rail whenever I go to the airport. When you take the rail, you see all the land they're building on, just communities. The Ho'opili especially is massive. The homes that they're building. So there's a lot more, and that creates more congestion. And that's kind of Ho'opili's like right in between Eva and Kapolei.
East Kapolei by some.
Yeah, East Kapolei. But they're building a high school there.
Yep.
Elementary. They're building all sorts of amenities to support the population.
And the infrastructure's coming in too. Farrington's getting widened as we speak, from the Kapolei golf course down to Waipahu.
Yep. Yeah, for sure. Yeah, that's right. It'll be interesting to see that finish.
Yeah.
And it's still out there if Kapolei really becomes the second city on the island.
Oh.
That's still in that process.
Yeah, they're still building. Still
I mean,
developing.
you got Chick-fil-A and Sonic here now.
I know.
Whoa.
Have you guys been to Sonic yet? No. My son went, and he wasn't a big fan of Sonic.
Really?
So I haven't been there just because the line is going down the street.
The line's out the door here.
Yeah. But I do want to try it out. I like the cherry limeade slushies. I mean, those are pretty good. And they got good tater tots too, right?
That's what I hear.
I like tots.
Tater tots. That's what's bringing you.
Was that Napoleon Dynamite? Tots. My daughter, actually, we were living in Tennessee, and I rented the movie at a Blockbuster. We had a Blockbuster back then.
Ooh.
And we brought the movie home, and my daughter's like, Dad, you are not going to like this movie. And I'm like, I'll be good. I've watched stupid movies before. I didn't even make it through 10 minutes of the movie. I'm like, I'm done. And I still haven't watched it. But all right, so let's kind of get back to what we're seeing with the market. Where have you seen, Eli, with rates, and kind of how have you seen the market so far this year?
I wouldn't say it's fun to watch, but it is interesting to see, especially with the conflict in Iran and watching rates. Just that is really driving a lot of how people feel and how the market is responding to it. So it's like a show, watching the daily news and seeing what happened in Iran and just all the surprises of we have a memorandum of understanding and then, that's obsolete now. They're bombing each other again. I feel like it's very interesting to watch that, but even throughout all of that, we're still, as you guys mentioned, the rates are not shooting up drastically and people are still able to find good deals and close on homes. So it is interesting to see. Obviously, the rates are not down where we would like for them to be, but I was having a conversation last night with a borrower, and he was talking about the rates in the Iran war and the concern about that. And I said, but look at it like this. This is creating a buyer's market for you. And so look at it from that perspective versus when I was buying when the rates were down in 2% and 3%, it was a feeding frenzy. People were throwing money at sellers and driving the prices up, and you just have to change your perspective on it.
That's a great point. We are in a condo market, absolute buyer's market. And as a buyer, you can get seller credits. Now, there are some condo owners who are underwater, and they may not be able to give you seller credits, but still, you could get seller credits through much of the island. And when rates, right now, rates are right around, VA rates are right around 6%, give or take a quarter point. And when rates get into the mid fives, those seller credits are going away. And guess what now? Instead of buying a home and not paying anything out of pocket except maybe your home inspection fee, right now you can do that. Most of my buyers are not paying anything out of pocket for closing. That's 1.5% to 2% of the purchase price of the home. And on a $1 million home, you're looking at $15,000 in closing costs, and you're not paying that because the seller's giving you credits to pay that. When rates get into the mid fives, those seller credits go away. Now you gotta pay to get your rate down. And with those seller credits, you're able to buy your rate down into the fours, and we're not even close. We haven't been in the fours in 4 years.
That's why I think it's so important just to have such open discussions about all of this, right? Because the macro and the micro, the White House and my house, right? There's so many different things to chat about here. We're talking about, are rates 6? Are they 5.5? Okay, let's talk about the micro of that impact, right? That's in our minds. That's macro. That's I'm waiting for rates to drop. In the micro, you've been doing this long. What's the savings there?
You're talking maybe $200 a month, $300 a month. Depends on the purchase price. Yeah.
So then let's go into the micro. Let's go into my house. Okay, maybe that's one less Uber Eats. Maybe that's one less night out with 3 old fashions, and that's where that savings is going to occur. So maybe again, not focusing on the White House, I can focus on my house and be like, hey, honey, this is just going to be one less dinner out, right? Let's go ahead. Let's get our foot in the door. Let's start building the equity, right? We're going to have to sacrifice day night in my obsession with old fashions, but
I'm taking that personal, Dan. But our date night, come on.
But it's such an important discussion to have because everybody's focused on Iran and everybody's focused on the White House and everybody's focused on these things that are outside their
they don't control
zone of control, and they have zero effort, zero focus, zero inward reflection to say, okay, maybe I don't need that $750 truck payment. Well, truck's probably $1,000 there, right?
Yeah.
Maybe I don't need this brand new car that's only going to be beat to hell by the salty air of this island. You know what I mean? By the calcified rain that's going to crush it. Let's focus on the things in your house. Let's focus on the things within your control, your behavior to make the better decisions for your family.
Right. So talking about planning and the runway that you might have if you're moving from the mainland to here, what runway do you have to get set up, to look at your numbers? Of course, doing a pre-approval is awesome to look at your numbers, but I'm even just talking, taking a look at your own stuff and saying, what does that mean to me? How much time do I have to fix it or prepare for that? Because my goal is always to go to closing and have the buyer not have to put anything down. That's awesome.
Yeah.
But you got to look at that from the micro level, your personal level. If you make that decision to buy, you're moving here, you know you're coming here, especially if you're military, and you plan on probably doing 3 or 6, 2 tours, then you probably want to look at what's the runway, how much time do I have to make sure the credit score is good, I can adjust and adapt to that $200 that you're saying I'm not going to have now, so I'm not going to go to dinner, I'm not going to order out, and actually plan and put that in place with that runway.
The real war that we should be having right now, in my opinion, doing so many pre-approvals, is the war on car payments. That's the dumbest expense that we're seeing. The average national car payment is what, $750 now?
Yeah.
You know what I mean? And that's your average, right? We know our military, we're generally not average. We like to go big. We like to get that dually. We like to get that truck. And that's going to push you to $1,000. Right. Okay, so let's go back to the H1 University conversation. Let's go back to the traffic conversation. And let's go back to what you're going to be doing on this island to begin with. You're going to be ideally getting on the water surfing, toss the surfboard on that island beater, save that $1,000 a month, do something better for your family. Wage the war on car payments.
Oh, I know. And a $1,000 car payment, that's about $200,000 in a home.
There you go.
And now, Grant, you're not going to find a $200,000 home here necessarily, but just the thought of that, you just reduced your buying power by $200,000 with that $1,000 car payment. You cut that in half, you get that $100,000 back. And it's important to buy the home and then buy the vehicle, but also the reason for that is now you have a better idea what your budget is once you have that home. And the Island Beater, my truck is absolutely that.
Yeah.
And the transmission's gone, but you know what? It still fits a surfboard. It still fits the stuff I need to take the track to the trash place, and it does everything I need.
It's the job done.
If there's one place where you don't necessarily need that fancy car, everybody seems to want it, right? The fancy car or truck, but it's here.
Yeah.
Because if you have a beater, I have had a number of cars, and the beater that we had that wound up getting totaled because it got hit was the car that we drove everywhere. Unless maybe we were going to dinner in Honolulu. It was the beater because you could do anything with it. I'm not worried about the kids spilling anything, the mess, the sand.
Yeah.
If you have a newer car and you take it to the beach, and you'll see when you come here, or if you're here along the North Shore, the line of cars, and you'll see some gorgeous cars, and you just know, man, one, if somebody sneezes, they can wipe out a whole row of cars. Two, they're coming back with a surfboard or with kids with just sand everywhere, and you can't get it off. You can't get it off till you get home.
by
The
the
car
owners.
is going to have sand in it.
Yeah.
So
Ditch
Yeah.
the payment. Ditch the payment.
the beater is-
Enjoy the surf.
Yeah, we are definitely believers in beaters. Just ask Jonah.
Yeah.
And it's like when we go to the, you should see his beater. I don't know if you've seen his beater, but like when we go to the beach, we're taking the beater, and it's for those reasons, but also because it's not drawing any attention to it.
Yeah.
It's not, oh, there's a beautiful car. It's yeah, that's a beater, and nobody cares about it. We leave it unlocked. We don't care because nobody's interested in it.
And you unlock more
and we don't have
buying
any.
Yeah, it's nice not having that $500 car payment. You could put that
Yeah.
into an IRA. You could put that
Right.
into an investment for sure. All right, so Eli.
Yes.
Eli,
Yes.
what? I guess you already gave me your take. You've been doing a lot of pre-approvals lately.
Yeah.
So what have you learned in the last year doing all the pre-approvals? What is one of your recommendations to buyers based on what? Because a loan officer really sees your whole financial picture better than anybody else. You can lie to your financial planner. You can't lie to your loan officer. The loan officer will find out.
I think the biggest thing is what really holds people back is they just have not taken care of their credit and their debt. And it's like we were just talking about. They're not thinking long term. They're thinking very short term. They're making very large purchases. They're not paying off their credit cards. They're accumulating debt, lots of debt. And they just have zero control, zero oversight. And I think that's probably the biggest thing. A lot of these guys have good income. It's stable. That's not the problem. It's their credit that's really holding them back. And I don't know. I think a lot of that has to do with education. I wasn't paying attention to my credit score when I was 20.
And you look at the bank statements, you're like, because we have to look at each bank statement. We have to look at everything that goes in and goes out of the account.
Yeah.
Because we have to count for big expenditures and big deposits and expenditures. And when you're looking at the account, you see all of these charges to Domino's,
Yes.
to Uber Eats, to all these Starbucks. I swear I want to punch my son every time he goes to Starbucks and spends money. That's all his Starbucks and 7-Eleven and all of these. If you really, people say, I can't afford it. You can, but you choose not to
Right.
afford it. And it's not casting blame on anybody. It's just we like ease. We like ease, and credit is easy. We got to learn to actually use a budget.
Yeah.
Let's talk
some
about
discipline.
that. Question for Dan. All right, and this isn't a stomp Dan or anything, but what's more important over, say, 30 years from when you're younger to that 30-year mark? Is it rate or is it the amount of savings, the percentage of savings? Are you worried about the interest rate or are you worried about putting that 5, 10, 15% away? What's more important? What in the long run is going to wind up being more important? And I just sat in a conference that this question was asked.
Oh,
And
interesting.
What's time in the market?
It's time.
It's time in the market.
So as long as you're putting money in, don't try to jump between rates. Just do it.
Yeah.
Yeah.
Do your savings, because that's what we're getting at
Yeah.
with, You know,
I was listening to a podcast today, and I wish somebody who's better at math and numbers and projections, please help us. But we take that Starbucks, whatever that monthly expense is, and especially your son's age. What is he? I think he just turned 21.
Just turned 21.
Starting today, if he took that monthly expense of Starbucks and the power of compounding, when he's your age, instant millionaire. Yeah. Not instant, it's going to take that time, but that compounding effect, the time in the market, if he took literally the dollar spent on Starbucks and just reallocated that dollar cost average into the market or into some appreciating asset, it's a guarantee.
Oh, yeah. So I just had my speaking to my Starbucks son. He's just started a Roth IRA. And so we got to go over and figure out how much a month he's going to put in. Ideally, 20% of his income going into investments and savings. He doesn't really need an emergency fund. I am his emergency fund, as unfortunately he knows. But he needs to start doing that. And the earlier you do that, the better. And as parents, the earlier we can educate our children on that and then show them the Trump account. I don't care if you don't like the name.
I got my son's social security number in the mail today. I can't wait to pick it up.
$1,000. Yeah, but you do that. There's a Trump calculator. There's other calculators online. If you invest and you do that every year, you're to 18.
Jeez, that runway. Talking about the runway.
And then you lengthen that runway, and then you transfer it over from a traditional IRA to a Roth IRA at their current income at 18. By the time they get to 60, they're going to be multi-millionaires. And it's just because you started on day one.
and the hard part is making it painless, having that conversation within whether the family or a couple or with yourself, in that you've got to put it away before you see it.
Yep. Automatic.
It's got to go away.
It's your first expense.
Before, yeah. It's your first expense. And it goes away before it hits your checking account.
Yeah.
If there's a way to do that, like in a 401k in business or something, it's got to go away so you don't see it, so that you don't ever use it or get used to using it. Because that's the hard part. That's where most people are, especially when things get tough. I can talk from from being a young father and having kids. We were saving for the kids, but stuff happens, and that money would get bleeded off to take care of this or that, whether it was for them or for the household. And it wound up, the 3 older girls right now, I don't have a big pot for them. I don't have anything to really hand them because it got used. You got to do it. You got to start as early as possible. It doesn't have to be 20%. 20% is awesome.
Yeah. No,
But
start
as
with
much
80,
as you can.
3%, 5%, and then build it up
And
over
just-
time.
Get it out of your account before you
Yeah.
can touch it and get adjusted to that, time.
As young as humanly possible.
Time. And that doesn't mean if you get a raise, it doesn't mean if you say you're working, you get a raise of 4%. Okay. Keep 3% to boost your cost of living. Take that and put it on top of what you're investing.
It's about discipline. It's all about discipline. You can do it, but you got to make sacrifices, and you got to have the discipline to stay with it. And I've done it where I stopped doing my TSP for a while. And you know what? If I'm going back, I should have just worked on my budget and not sacrificed the TSP. And you go back to the Trump account. That's one thing. That's people. You can use that. You can do a 529 account. They're totally separate. The wealth account, the Trump account, is a wealth account. That's building wealth. I wouldn't take any of that out, because then you shorten up that runway. Mm-hmm. But the 529 for with my 2 grandchildren, my son-in-law and my daughter, I'm like, what the hell is she? She's my daughter. They're doing a Trump account, and the max you can do is $5,000 a year, $1,000 extra the first year thanks to the account. But 529, you're really not limited. That's for the education. I've been doing that for my grandson for 3 years now. And he's got over just doing $500 a month. He's got over almost $30,000 in that account.
The 529s are so important, incredibly important too.
Yeah.
Just open up my son's. Actually, I didn't open up. And here's a nice little tidbit. If you are looking towards your children's future, open up the 529 in your name. You're the beneficiary. Larry's not going back to college, but he can open up that account
Don't
in
limit
his
Larry.
own name, and you just change the beneficiary. And you can do that, I mean, generationally. along the way. So on June, what is today? June, July? On June 16th, the day after my son was born, I opened up another 529. Opened it up. The beneficiary is my wife. Today, I'm picking up his social security number in the mail, and I'll be changing that beneficiary. He's already got $100 towards his college fund. But the other perk about the 529 and building generational wealth is now the allowed transition, which is going to adjust over years, where you can convert that to the Roth IRA. Yeah. So beginning on day none.
Yeah. You talk about
Yeah.
establishing that legacy early for your children, and nobody did that for me. And much like you learn this as you go along, that it's maybe too late for me, but it's not too late for my children. And the key is to just get started.
I think we're talking about all of this in education, like we're doing this with our boys. I didn't have this education. I figured it started learning this stuff into my late 30s and 40s. Our goal is that our kids, this is not a foreign language for our kids, that this needs to be something that's part of their vernacular. It's just something they understand. Buying a home, what does it mean that this is an investment? How do you take care of this investment? We're getting our kids involved now. We're getting them involved we have them calling when we have issues with one of our properties. They're talking to the trades and working on setting up the appointments. And I'm going to have my other son doing the back office and doing the accounting, because these are going to be their investments. These are their properties when we're gone. So they need to know how to take care of them. The education is so important to get it started early, so it's not terms they've never heard before.
It's great. Really good.
Because for me, it's like I didn't grow up hearing any of these things.
Yeah.
I had to fumble around and figure it out, right?
Or you got young children, mine are super young. When it comes to the investing mindset, and you're talking about 401ks and setting it aside, one of the ideas I always toss around, even if the kids just work, a non-official job, is doing the parental match, right? So as they're investing, if they're putting money into a 529, eventually a Roth IRA, whatever they do, turn around and just match it. Could we probably be contributing to their wealth behind the scenes? My goal is to not tell them about any of it. But then once they get into the habit of being able to do it themselves, I'm just like, hey, let me introduce you to the match. You do this, I will match that. And it's just, again, instilling those habits at the youngest age possible. So
Tying this all back into buying a home, wanting to buy a home, and being prepared to buy a home. One, make that part of the plan for the kids, whether it's 529, whatever it be, Trump account. And so that they have that runway, and you do what you can to make sure that you're ready when you buy. And that's whether you're moving here to Oahu or you want to buy on the mainland or even upgrade on the mainland, thinking about, all right, how do we fill that gap to make sure we're ready?
Yeah.
And we have the money that we need, whether it be for a down payment or whatever part of closing costs, whatever it be.
that's that's my house behavior. So absolutely.
That's great. Another thing I've heard, and I didn't have to do it, I haven't had to do it yet, but you got your children living at home with you when they're adults. You should make them pay rent. And I've heard of people just taking that rent and putting it aside so that they have that money so they can buy a house. Use that for a down payment when they buy a house, which I'm like, that's genius.
Right.
Even if it's just high yield savings or something. Find some with 3%.
Yeah. And to me, I'm like, that is a great way to help your children. Because I tell you, I would love to have my children live with me. I'd love having my children around. Absolute. Even if I don't agree with them 100% of the time, I love having them around. And it's just, especially as they get older, I miss having them around. And so I will take that in a heartbeat, and I'll make them pay rent, but I'm not really going to I don't need that money. Okay. All right. So let's close it. Let's finish this up real quick. Oh, great talk today. We went all over the place. What's your takeaway from our talk today?
It's almost beating a dead horse at this point, but education. Just you have to start where you're at. Drop the ego. Leave the ego at the door. Ask the questions. Just say, "Hey, Larry, I am in the dark. I don't know a thing about a thing. Like, where do I begin?"
That's right, man. No ego, amigo. Just ask the question. Yeah, I heard that today in a Peloton ride as I was getting my ass kicked. But no ego, amigo. What about you, Eli?
I would say just be bold, and especially for people who have never purchased or are afraid, as long as you have good advisors, be bold and start that journey, because we've not regretted one decision we've made. Oh, and we've made mistakes, but getting started is the first step, and that's what I would encourage.
Yeah.
Wait, let me back it up to millennials and anything behind me. Watch the TikTok financial advisors. You have to watch that too, because like that is such a threat these days. The get rich quick.
Oh yeah, that's so true. That's so true. Educate yourself. But who's educating?
So be bold, but watch where you're getting.
And
your
don't be
content
reckless.
from.
Yeah,
There's a
for
difference
sure.
between
Yeah.
bold and reckless.
Yeah.
And I just lost money doing something that was absolutely. I totally went against all of my investing wisdom, and it's too much to explain in this one. But fucking A, I was dumb, and I let my guard down, and I lost not Tom Brady amounts of lost money, but
Yeah.
still money I could have used for something else. How about you, Mike?
You're not in it alone. And if you come to the broker, to your loan officer, we have a team. We can probably hook you up with financial planners, wealth managers that we trust. And we can look at your numbers. We can bring them into a discussion if we want, so that you can look at that plan for both your runway to buying that house and then your plan for the kids, and really realizing that maybe it's just not going to Starbucks every day, or it's not, and no hit on Starbucks, but just not doing those things that you know cost you. And it's hard. It is. It's not easy. But that's why you need a team to do that can help you get there and kind of help you with your discipline.
Yeah.
So we're here for that, to do that pre-approval, to do that analysis, and to connect you where you might need help.
We're not financial planners. None of us has a financial planning degree, but we are wealth managers. We help you manage the most expensive and probably some of the most equity that you have. Your net worth is in your home, and we're the wealth manager in that respect. And working with you and your financial advisor, we can truly help you get to that next level and build that financial legacy. Thanks, guys, for this talk today. It was awesome. I actually really enjoyed it. Next time, we got to have some old fashions. All right, let's do it. Have a great week. Aloha.
Thank you.
Thanks for tuning in to In Search of Excellence Island Style. Stay connected for more conversations with leaders raising the standard through purpose, values, and aloha.